Welcome to Alpha Insights. I'm Hope, your host today. We're diving into the latest developments in real estate financing, and I'm excited to welcome our guest, Angela, a seasoned wealth manager with a wealth of knowledge on economic trends.
Thanks for having me, Hope. It's great to be here and discuss what's happening in the real estate market.
So, Angela, it seems we've seen a significant drop in mortgage rates recently, getting close to that 6% mark. What's driving this change?
Absolutely, Hope. The primary driver is a directive from the president for Fannie Mae and Freddie Mac to buy up to $200 billion in mortgage backed securities, or MBS. This means they're providing more capital to the mortgage market, which reduces pressure on mortgage rates.
Interesting. So, for everyday investors, how does this translate into potential opportunities?
Lower mortgage rates can improve affordability for homebuyers, leading to an uptick in refinancing activity. This means that if you've been considering refinancing your mortgage, now may be an ideal time. In the bigger picture, increased demand for housing and mortgage-backed instruments is likely.
That makes sense. And I hear there's also been quite a bit of movement in construction financing recently.
Yes, indeed. For instance, Bank OZK provided over $100 million in financing for a mixed-use project in suburban Philadelphia. This reflects a strong appetite for multifamily and mixed-use developments, indicating investor confidence in those areas.
So there's still a lot of capital available for new developments despite market fluctuations?
Exactly. We're seeing various forms of financing being deployed from construction loans to agency refinances, which shows that there's still significant capital flowing into both new developments and stabilizing existing properties.
That's encouraging news. Let's not forget about leasing and brokerage activities. How are these sectors performing?
The leasing market is also vibrant. For example, Laundry B signed a long-term lease in Jamaica, New York, and we're noticing continued demand for retail and logistics spaces. The market's activity indicates that investors are keen on finding value in neighborhood retail and industrial spaces.
It's impressive to see so many sectors within real estate still thriving. But I've also heard about some regulatory changes, like the new law in Wisconsin targeting brokerage practices. Can you tell us more about that?
Certainly, this new law requires written consent from sellers for limited listings and brings transparency to compensation standards. Such changes can reshape local brokerage practices, which may impact how deals are structured and fees are handled. It's essential for investors to be aware of these nuances as they can influence market dynamics.
That makes a lot of sense. With these moving parts, what should investors keep an eye on going forward, Angela?
Investors should monitor several key areas. First, the timelines for those $200 billion in GSE purchases. Second, daily moves in mortgage rates and the volume of refinance applications. And lastly, watch for updates on capital market activities and any other state-level regulations.
Great points. As we wrap up, can you summarize a few key takeaways for our listeners?
Absolutely. First, the drop in mortgage rates could lead to increased refinancing and purchasing activity. Second, there's robust capital deployment in both new and existing real estate projects. And third, keep an eye on evolving regulations as they can alter transaction workflows significantly.
Thanks so much for your insights, Angela. Such valuable information for our listeners as they navigate this dynamic market.
Thank you, Hope. Happy to share these updates.
And to our listeners, thank you for tuning in to Alpha Insights. Stay informed, and until next time, happy investing.